2, 1.
Hey, what's going on, guys? My name is Aaron.
My name is Daniel.
And this is another special guest episode of the Summer Pod podcast. We are joined by the one and only Jacob Bendah. Jacob Bendah.
Round of applause.
How you doing? So Jacob, for those of you who don't know, Jacob is a fraternity brother in the AE Pi fraternity over at the CSUN chapter. Jacob, how you doing, man?
I'm doing great. Had a great Shabbat last night.
Oh, Shabbat Shalom.
Shabbat
Shalom.
Shabbat Shalom, everyone.
Shabbat Shalom.
Shabbat
Shabbat Shalom.
Yeah, I'm glad to be here.
Yeah?
I've always wanted an opportunity to just talk about my passion and stuff like that. Like, I've had these conversations in my head, but now
That's great.
Now
you
other
can just
people
share
hear
it with
For
us.
Yeah,
millions
exactly.
of
Sick.
people. You can share it to millions of people.
Yeah.
Oh, yeah, because we have millions of viewers.
We do have millions
Yeah,
of
yeah.
viewers.
Because we're sponsored by Tommy Bahama. Tommy Bahama.
Check it out.
Sponsor them. Do it.
Anyway, so Jacob, how's life been for you? What's been going on, man?
So my life has been amazing.
And I
Lots of
apologize.
change.
I apologize. Real quick, I have to make the announcements. We are in a very active environment. We have jackhammering, of course, featuring the jackhammer, and we have painters who are spray painting the entire house. So we have a lot of background noise going on. So we're gonna do our best to, not have that noise be.
Just stop. Nope, it started. All right,
yeah.
never mind.
So if you hear a lot of background noise, it's just our environment, but it shouldn't take away from the amazing, insightful information that Jacob Bendah will be
So
sharing.
excited.
And his name
So
is Jacob
excited.
Bendah. It's all Jacob Bendah. That's what
Jacob Earth
Bendah.
Bendah.
Jacob Earth Bendah.
Earth Bendah,
baby.
Fire Bendah. Earth, or wait.
Air Bendah?
Earth, fire, or water?
Earth.
Earth?
Earth.
Yeah.
Earthquake.
Yeah.
Tyler, the Creator.
Earthquake.
Oh. Copyright.
So it's summer break, right?
Yes. Yes.
How's that been going? You been working out?
Oh, so this summer, I have a philosophy when it comes to if you do one thing really well, it flows into everything. Like if you really try, you know what I mean?
Yeah.
So I was like, okay, I'm going to work out really hard. I'm going to eat right. I have an internship, so I'm like trying my best in my internship. So it's
What's your internship?
So I'm a consulting intern for an accounting firm.
Cool.
And usually you get a job offer if you play your cards right. So I'm putting a lot of effort, you know? Like I'm trying to
Definitely.
Yeah.
give me all of your work, boss. Like I'll do it. I'll do all of it.
So I mean, jumping into that, what do you want to do after college, say, or like as a job?
So my goal is have trading as like not a side hustle, but like a side business, for taxes, for income.
Yeah.
And
Passive income.
and have like an actual job in consulting, which has like traveling. You get to meet other businesses, get to learn about other businesses.
Yeah.
I kind of have a balance of that. I would say for like at least the first 10 years, just save as much money as I can.
Yeah, of course.
And have financial freedom at some point. I don't want to put an age time frame because that pressure is never good for anyone's mindset,
For sure.
Yeah.
So it'll happen if you just don't give up. And
As long as you're doing the right things,
Exactly.
you're good.
Why
You're
say
chilling.
why say 29 before I'm 30? I'm going to be retired. Like
Yeah.
it's a lot of pressure. What
It
if,
is,
you
yeah.
could be 27. What if the economy falls apart?
And you
things
don't even
change?
have to retire. I mean, if you love what you're doing, you could just keep going.
Exactly.
you
That's
know?
a whole nother thing.
Yeah.
No, yeah. So for those of you who don't know, Jacob Bendah is a day trader. He trades. So he trades. You trade stocks.
Yes.
Trades moose.
Yes, I am a gap
camels.
trader.
But he's not like your average Robin Hood. Buy some weekly calls.
By Robin
He's,
Hood, he's looking at me, and because I have Robin Hood.
he's like Bendah's a legit trader.
Wow.
So let's talk a
What-
little
yeah,
bit
wh-
about that. How did you? Well, first of all,
I
what
want to put
is
some asterisks.
what is?
I-
Go for it.
Yeah, okay. One is I am break even. I am not a profitable trader. However, my plan is like in 3 years from when I start to be profitable. So right now, my like first year, my goals, I hit all of them. So for me, I'm not trying to rush. Like I keep my trading risk low. I want to build the right habits. And I'm definitely becoming more consistent. But like man, like when I moved to LA in November, trading then and trading now, I'm way more consistent. Like I'm so different. So I can't imagine the next year how much more consistent I'll be. And once you have that consistency, because the edge in day trading is really small, you know, so you have to be consistent to hit that.
What's the edge? Can you explain that to the viewers?
An edge. What's an edge? So, I mean, what's the difference between a casino and day trading, right? There's obviously day traders that make money that's like not off inside information, right? Pelosi. And
Whoa, this is
Okay, my bad.
She just name dropping senators.
Wow.
Well, think of it. You want to be like a casino at the end of the day.
Mhm.
What does a casino have? Like a 2% edge. They're like 52% win rate.
Yeah.
Right? But they make bank.
Right.
Right? And that edge is like 2%. So my edge is based off of back testing of like tens of thousands of trades that I learned from like this book. Like I have like a whole like education I went through, and like I've done a lot of reading. So you have to like find a strategy that works with your personality. So for me, I'm a gap trader. So every morning I trade different stocks, and I have like 2 patterns, and it's all based off of momentum, right? Breakouts, everyone knows the breakout, right? And then I have something called the 3-bar play, which is like a breakout, but it's kind of more momentum based, as in the first bar needs to be like a big. I trade with candlesticks.
Yeah, so for those who don't know, and Bendah can explain this more,
Yeah.
when you're talking about gap trading, you're talking about the difference between what the market closes at and what it opens at.
Yes.
And that's the gap. So sometimes the market gaps up when it opens higher, or it can gap down.
Right.
So you're playing the momentum between the gap, right?
Yeah, I should go more macro. I'm getting like 2. I'm like here, and I gotta be more here.
And then the candlesticks, that's just a way of analyzing the chart.
Right.
You
the
can
cash
the chart can be in bars.
So
basically.
what does your like average day look like? Say you wake up in the morning, what do you do
So I wake up at 5:20 in the morning.
every day?
No, only when the market's open. But
Well, yeah, is
Even
that
weekends-
Monday through Friday.
Monday through Friday you wake up at 5:20 in the morning?
yeah,
Wow.
Yeah.
Okay.
yeah. I mean, yeah. My
You go
my-
back to sleep afterwards?
It took. I could talk about how the whole progression of how it all started.
Yeah.
Mhm.
But yeah. Right now, what I do, I wake up at 5:20.
Mhm.
5:20 to 5:25, I debate why I'm awake, and then from I'm not kidding. And then from 5:25 to 5:45, I actually meditate for like 20 minutes. Or
Oh,
like 18
nice.
minutes. It depends
Nice.
like how long it takes to debate myself to get up, and it's. I just try to empty my thoughts. Like I think of like the problem, I kind of just have to like push it away, because when it comes to trading, all you can really do is like visualize how you can act. When it comes to like the way I meditate, it's like I have to like disassociate in a way of like I don't feel emotion, because your emotion is what ruins your consistency. You know, fear, greed,
Yeah.
what happened yesterday. You know, it could be something simple as like I forgot a meal prep yesterday. Like dang it. You know, that energy, it goes into your trading, because it all reconnects. You know,
Yeah.
when you enter a trade and like the bar isn't the way you want it to be, you get these thoughts, but you have to not act upon them. You know, that's like half of it. But now I'm like,
No, you're good. I mean, I also feel like, say, like with like sometimes when I have like anxiety or like fears, I overthink things, and then all of a sudden I'm like, wait, where am I? Like, what am I doing here? Like, I just feel like I'm like disassociated with my body because I'm so nervous and like overthinking things. It's really nice to just let go and focus on what you need to focus on, and not be all,
So the meditation helps to really clear your mind and get you
Right.
into the space to
Right.
be handling, millions of dollars as you.
millions of dollars.
Okay, so after you meditate, I assume you have breakfast.
No.
Don't have breakfast.
No. So after I meditate, I take a caffeine mint.
What?
Yeah,
a caffeine mint?
Yeah, so good. They're called neuro. Well, I don't.
Aaron, you need
Sponsored
to
by
get on that.
Neuromints now.
Caffeine
Aaron was
mint.
just talking about he needs to get tons of Red Bulls for next time.
Yeah,
in
I
the
need
podcast
Red
because
Bulls.
We're kind of tired.
I'm
But-
tired because I spent this whole week with you. Anyway,
Okay, all right.
watch our regular episode for details there. Anyway, continue.
Yeah, so I take a Neuromint, and sometimes I drink a protein shake in the morning just to have something in my stomach. That's something I've been doing recently since like the summer started, but then the whole like trading thing starts. So I go on my brokerage. I then have a scanner. I scan the gap ups, the gap downs that fit my criteria, and some of that is it needs to have over 30,000 shares of volume. The average trading range for the stock needs to be over $1.50. The price of the stock needs to be over $10. I don't trade anything with low volume. Like the stock needs to have at least 300,000 shares of volume before I could even trade it, because slippage, low liquidity, choppiness, like there's like level.
So volume
Really
is a
matters.
major part, and the volume,
Volume's everything.
because with the volume has to do with the amount of times the shares are being traded throughout the day. So if you have a stock with really low volume, the variations in the price is affected because liquidity is affected. So volume is really important.
Oh yeah, the bid and ask could be wide.
Mm-hmm.
I mean, like this Friday, I had crazy slippage. Like the stock was at like $41 and no, $14.40. And in 1 second, I had my order at 14.40 and went all the way down to 14.10, and it just gave it to me at 14.10. I'm like, my stop loss was like, the risk was 50 cents. So it's like most of my risk was just like that. Like when I had to like adjust everything. It made it useless. Like I pretty much instantly lost money because I didn't really anticipate the giant drop. Like Friday, I gave back all my profits of the week. It was tough. Yeah.
So what's been your worst trade? What's been your least successful trade that just blew up on you?
Okay, so sometimes for fun, you know, I do the whole like swing trade gamble, you know.
Oh God.
And
wait. Explain what that is.
You look at a stock and you're like, man, I think it. You know, my friend said it was cool. I'm gonna invest in it.
Yeah.
You know, like an OTC.
So basically, like you sit down at the roulette table, and you go, I think it's gonna go on red. And then you put your money on red.
Yeah,
sometimes that works.
You know, I go with friends sometimes. Like, I don't know.
Yeah.
I don't consider it day trading. It's more just gambling, like dumb gambling. You know.
Yeah.
But it was CYDY, and it was at. What do you know? Do you know the stock?
No, never heard of it.
Yeah, it's an
What
OTC.
is CYDY? What is that?
Yeah, what do they do?
It's a bio stock.
Oh my God.
You know,
Bio
something with cancer treatment, and it's like really good.
Oh yeah,
supposed.
It's a very good.
You know, and it just didn't work out. I had a stop loss and everything. I risked $600. Like if I was wrong, it'd be 600. If I was right, it would have been like 8x. So like $4,000.
Yeah.
Oh wow.
Like I thought it was gonna work.
Were they like gonna release like a trial the next day or something? They were
gonna be listed on the NASDAQ. My dad's like, it's gonna be good.
Yeah.
And
wow. Does your dad also do stocks and all that stuff?
He day trades, but he does a different style than me.
Okay.
He does.
Has he taught you like anything or?
No, So I'm a technical trader. I don't look at fundamentals. He's a fundamental trader.
Okay.
So we're totally different. We argue all the time.
So what's the difference between technicals and fundamentals?
Technical, all I look at is cash flow. I look at volume and cash flow. That's it. The price action, and the cash flow, and the past and the volume, like that's all I look at.
Versus fundamentals, when you're taking into account actually what the company is, what the company actually does, the fundamentals of the company.
But okay, so what do you think would be better, fundamental or technical? Because fundamental.
I think you need both, to be honest.
Really?
Especially if you swing trade.
But you only do technical.
Right.
You don't do fundamental.
Because that's just my style.
But then you think that there should be both.
So I think it should be both because it could be both. You can there's infinite ways to make money in this market.
Yeah.
There's so many ways to have an edge. So many people make money in different ways, you know?
Yeah.
There's no right way. I think the whole argument's dumb. I'm gonna be honest, like why are we fighting over this? Do whatever your mind works with. Whatever your personality can do, what it can handle.
Okay.
I have a very I like being right. You know, I have a very adventurous mind. And that's awful for day trading. It's the worst thing you could have.
Yeah.
So for me, having fundamentals is more things to think about. My trading plan would be huge. Like there'd be so many rules I would need for myself to stay consistent. And for me, it wouldn't work. It wouldn't make sense.
But also, when you're trading in such small time frames, the technicals are more important, I would say, than fundamentals.
Because the
fundamentals of a company would affect the stock price of the company over a longer period of time versus the short-term technicals.
Yeah.
So technicals are by far more important for
Plus,
trading.
Yeah, short term, everyone already knows. The news has been out for a while with fundamentals. Short term, it's not. I'm not saying it's useless, but it's kind of useless.
Well,
Cash
no,
flow,
it's useful. It's useful to watch the news or to know what's going on with the company before you even try to invest anything with the company.
Right, but the cash flow tells you all. If it's gapped down, there's some bad news, right?
Yeah.
But what I look at is, okay, how much did it gap down? Is it over 20%? That's a lot. It's probably going to buy back up. I shouldn't short that. Or is it under resistance? Is it at resistance? Is there void? Is there space for me to trade? I look at the cash flow that's available. I'm trading in a sense people's mindsets in their mind. So let's say, but what I mean by I'm trading people.
Trading people's mindsets.
Yeah, I'm trading people's minds. Think it's like greed and fear. That's like all I trade.
Because that's a lot of how the market works in the short run.
Yeah,
it's based off emotion.
Exactly.
It's based on momentum.
So
in the short run,
you're
playing that game of basically trading off other people's trades, which is based on their mindset, versus the long run where the fundamentals of the company really comes into play to support the stock price.
Right. So when does the market open? Like Eastern time, it would be 8. 8:30.
I think it's 9:30.
9:30,
9:30?
9:30 Eastern.
Yeah.
So
Sorry,
it's-
I don't know
the
much
market,
about stocks.
market
I'm
open,
sorry.
market open 6:30 on the West Coast,
And
Yeah.
you trade that whole period of time? No.
or 3:30 if
No,
you live in
no.
Hawaii.
I only trade for 30
Oh,
minutes,
yeah.
6:30 to 7.
Oh, really?
Yeah, I used to trade to 7:30, but I have a whole Excel sheet. I type in everything, the time I took the trade, when I get out of the
Oh,
trade, my
nice.
stop loss for the
Do you,
trade.
you track everything.
Is it against the market? Is it for the
So
market? I
so
track
when
it
would you
all.
say is the best time to trade, to day trade?
So I think it's when there's the most liquidity, when there's the most volume.
Yeah.
And I think that's was it 6:30 to 9:30? I know they say to 11 Eastern, something like that.
Oh,
What's
Yeah.
11 Eastern?
So
11
yeah, because
Eastern,
the
that's-
first,
That's
Hour
I would say
and a
the
half,
first,
2 hours.
if you look at the sticks for like the volume,
Mhm.
right at open, there's a ton of volume. Then it kind of tapers off throughout the day.
Yeah.
Then towards close, volume really picks up towards the close also.
Mhm.
Right.
And then you can get a spike or two during the day, but definitely an open and close
Yeah.
for sure.
So
really
you,
high
so you think
volume.
you would do day trading for the rest of your life? You'd say? I mean,
Yeah.
you like day trading. You're passionate about it.
Yeah.
Okay.
I think like being born in America is amazing, and having the ability to even trade like anything like this is amazing to produce income.
Yeah.
Mhm.
What I really did not expect this to be so hard though. This like the whole stigma
Mhm.
with trading. It's like
So what's been the most difficult part in terms of trading? Is it getting the routine down? Is it kind of conquering your own kind of greed and your own kind of ego? What's been the hardest part?
it's a psychology.
Yeah.
Anyone in this world can read a chart. I could
Mhm.
teach any of you guys and give you guys 6 months. You'll read it as good as me. Like I understood how to read a chart in the first 6 months. I've been trading since consistently since like March of 2020, like right when
Oh,
when
so
it
it's-
crashed. That's how
So
I
it's
got
been
into
recent.
it. all.
Yeah.
But like the first 6 months you get it, but then you have to fight you. Like you
Mhm.
are the biggest enemy. Your emotions, everything. Your inconsistency because of it ruins everything. Like you could have a lucky month or two, but then it's it all goes away after the next couple months. You'll be
Yeah.
unlucky again because there's no consistency.
Mm-hmm.
There's no edge. You're like at
Yeah.
40% odds.
And that's I think that's an interesting kind of thing when it comes to trading and also investing. It's like if you have like a couple lucky trades and you make money in the short run, I feel like the vast majority of people who not saying they didn't, not saying people who don't actually earn the money, but if you make it based off of a fluke, you're gonna give it back at some point.
Exactly.
It's the people who make money because of they have like a really strong investment thesis or they have a really strong philosophy or they have that routine and that's why they made money. That's the money they're gonna keep. Versus you YOLO into Dogecoin, you make 50x and then you do it again, and then you lose everything.
Yeah.
Because I think the market has a way of getting money back from people who didn't really deserve it, which is kind of interesting.
But there were people that that said YOLO into Dogecoin,
Right.
and now they're millionaires, but they keep it, they hold it, they don't really do anything
And
more with
if
it.
people are able
Shade.
to have that discipline,
What?
the shade, the Dogecoin
Oh
millionaire.
yeah, the shade.
yeah, no, and if people are able to have that discipline, that's amazing, and that's like life-changing amount of money. But
Hold
a lot,
on. Is that Southwest? No, it's not.
we always have to check for which airplanes are flying above us. No, but for people who have that discipline, it's amazing. But I think a lot of people don't, and as a result, they end up giving that money back.
Yeah, that's true.
Because that's what the market is. It's just money changing hands.
It's the mindset. From the
Yeah.
impatient to the patient, huh?
That's exactly
Ah.
No, but it's really weird because I was never really into stocks or anything like that or any I never really thought about it.
Mhm.
But it was weird. I don't know why I started thinking about it. I don't know if anybody told me anything about it. But during COVID, like right in March, I started investing
into airlines.
into airlines. People were like,
Right
"Oh,
after Warren
you're
Buffett sold all his
stupid, blah, blah, blah,
airlines.
blah." But I invested like it wasn't that much, but I invested in I was gonna say Apple in Apple Airlines.
Cha-ching.
I invested in Delta and also Spirit, but I sold my Spirit. Actually, Aaron told me to do it. But I sold my Spirit and bought more Delta afterwards. But now like Delta's up like 50%.
Yeah.
From March 2020.
Bought a peak fear.
Yeah.
Impatient to the patient.
So that's kind
Yeah,
of
there we go.
Back in March, were you trading back in March in 2020 when the whole market
Oh,
was
So
was going
what,
to
what got
to the
me?
wall?
Yeah. So I traded when the crash started. So what happened was Robinhood, froze everyone's accounts and you couldn't sell for
It was
a day.
mayhem.
Oh really?
Yeah, I lost all my profits that I was made. I mean,
what was their logic? Why did they hold? Like why did they tell everyone you can't?
their
sell?
servers just weren't ready for it, like or
Oh.
something like that.
Huh.
Yeah.
Yeah.
And so I lost my $500 of profit I've been making the whole year. I was like, I'm so
no.
cool. Yeah, like
Yeah.
buying Chevron and like
Chevron.
Yeah,
Like,
29. I
Chevron
started
going
trading
into
in
COVID.
2019 on Robinhood.
Yeah.
It wasn't day trading. I was just holding some stocks, just screwing around.
Yeah.
And the crash happened, and my dad was trading. I don't know if you know what JNUG is.
No.
So it's a 3 times leverage
Okay.
gold mining ETF instrument.
Okay. Yeah,
And
yeah.
it went from $180 to $4. And
Wow.
And he was on 3x leverage.
Yeah, he's fine. No, he didn't. He did not.
Oh, the
hold that all
ETF.
way
The
down.
ETF was a leverage ETF.
Yeah, no, I'm saying
Yeah,
how I learned about it. He didn't.
Yeah.
He did not hold that all the way. That's a rest in peace sign. If you.
Well, a leverage ETF, because for those of you who don't know, you can trade using leverage. So you can trade using borrowed money, but you can they also have ETFs, these exchange traded funds, where the movement of the stock is amplified by a certain degree. So if it's like a 3x leverage stock, if the market moves, a certain percent, that stock is going to move in accordance 3x in terms of magnitude. So if things go south like they did, they go 3 times south, which is why I went from 100 something to $4.
Yeah.
Yeah. Okay.
Yeah, and it's based off gold mining futures, and these like leveraged ETFs, they reverse split forever. Like this crash happens all the time because if a market corrects 30%, it goes down 90%.
Yeah.
Now it's like pennies. Went from hundreds of dollars to pennies. What do? They reverse split it, right? So I was trading it before the reverse split. And I don't know if you want to explain the reverse split.
So when you reverse split, correct me if I'm wrong, when a stock splits, let's say they do like a 2-to-1 split, they'll basically double the amount of shares while having the price. So a reverse split is the opposite. So if you could take, let's say you could take a quarter of the outstanding shares away and then increase the price by a quarter. So it's a reverse split.
But they did it by 10.
They did it. Okay.
That's terrible.
So they cut the amount of shares in existence by 10th.
By 10.
By 10.
Yes.
By 10.
Wow.
Yes. But
So for every 10 shares, there was now 1 share.
yeah. Yeah.
And then they 10x the price of the stock.
Yeah. That's just how it goes.
Yeah.
Like if you look back to like 2013, 14, it's like it says the share price is $10,000 a share. It wasn't. It just kept reverse splitting every time it crashed. But So that's how I got into it. I was trading before the reverse split when it was $4. 2 weeks straight, I just day traded and made money every single time. 2 weeks in in a row.
Wow.
Yeah. And I lost money 2 times in a row. I was like, okay, they're giving it back. I knew it was gambling. I'm like, who doesn't have that thought in their mind? Like I didn't think I was a genius. I was watching videos from live traders, and he kind of let me know through videos that I'm gambling. So I realized that like while midst of me like winning a couple $100 a day, and I'm happy I didn't like give it back. But that's how it got me interested in it. I was like, oh, you just buy and sell. I would literally it's so funny. I would wake up at 6:25 in the morning. Only 5 minutes.
5 minutes before market
No,
opens.
I was literally gambling. Really, that's what
yeah.
it was.
Yeah.
And I didn't really know what I was doing. I watched a video about like a pattern, and if it wasn't there, I wouldn't take anything. But I'd feel bad for myself. Damn, my chance! I could have made 200.
Yeah.
Oh, if I just bought it in the open,
Yeah.
would have been rich.
There's so many what ifs.
That's
Yeah.
exactly
So many what ifs.
a very interesting thing about the markets is that you could always look into the past.
Right.
And you could look into the past and say, well, if I did this and if I sold here and I bought here, well, I would have made so much money.
But from your experience, you're just like, okay, buy more, and then see what happens afterwards. Like I don't know. When I first got into like stocks and stuff, I would just like, buy and then look back and say, like, shit, like I could have sold it and I could have made $100. So one time I sold like Apple, I think for I made $100 profit, but then I could have held it for another few months and made $200 profit. I don't know.
What are some of your tips for like dealing with kind of dealing with that FOMO in the markets? Is there any way to actually conquer that FOMO? Wow, I should have bought, back in the past.
Yeah. So you take a deep breath.
Yeah.
And you remember that, there will always be a tomorrow. If the market goes to zero, your lives probably mean nothing now. America's gone.
Yeah.
So just know there's always an opportunity. There's always going to be a Bitcoin number 2 sometime in the future, another Apple. And you got to be patient and just keep looking,
Because that opportunity is in the future. It's not in the past.
Yeah, you're not going to find anything in the past other than like well, you know what I mean. like it's not over.
Mm.
You know,
There's gonna be a Tesla.
there might be
coin,
something
right,
better
Aaron?
out there
Yeah.
brewing right now, and all you have to do is just find that consolidation and just start putting
Mhm.
just DCAing into it or something. You know,
Yeah.
there's always opportunity. There's a
Mhm.
million ways to make money in the market.
It's crazy.
You know,
Is that Southwest?
Not Southwest.
Damn it!
There was another
and
plane.
another thing with FOMO that I realized later is that you're assuming that you would never sell like throughout the whole time. Like
Exactly.
your brain would never be like, that's enough money. I'm good. I'll sell halfway through. You know, you're thinking, oh, I'm gonna ride it to the top.
But that's how it is with human beings. I feel like like look at game shows. Look at Deal or No Deal.
Mhm.
Like they get all this money and they're still not happy with it, and they're like, I can make more, but then they lose. Like I feel like the stock market is very similar in the fact that you get all this profit, say because you made a good trade, and then you're like, you know what? Let me put all that back in and risk the loss to get a win. I don't know. It's just like
Trading is
like
against human nature. That's why it's so hard.
against human nature.
It's against human nature. We all just want to like buy, sell. You know, it's
Mhm.
you want to act on your feelings all the time. You feel scared, you want to get out. But it's
Mhm.
not what you're supposed to do if you have a plan, right? If you have
Yeah,
like a goal to attain, like I don't know, like
it's the fight or flight, sympathetic.
right, the fight or flight is not it's not good for trading,
Yeah,
you know?
So that's an interesting point to bring up, because I definitely think we have some viewers watching the podcast now that are interested, and people, you're probably igniting a lot of people's like interest in trading. So for the average person out there who maybe they own a little bit of stocks, maybe they haven't been successful, and maybe they hear your story and they're kind of interested in getting into trading, what would you say to someone who wants to get into trading, kind of maybe wants to know more what it's about, wants to find some good source of education? What's kind of the rundown you would give to someone?
I would go to
Wise
I would go to
words.
Live Traders on their YouTube channel. So
Live
much
Traders on YouTube.
free content. So much free content.
Mm-hmm.
And risk management. I don't know. There's so much. I've learned so much. If I had to tell people like three things, be risk management, like find the edge, and definitely do reading on psychology, or read this book, Super Trader by Van K. Tharp.
Mm.
Like,
Mhm.
if you don't want to buy an education or whatever, which is cool, like, you don't need to spend $10,000. Like, that's complete BS.
On a course.
Yeah.
yeah.
Like, Super Trader, $20 book. Van K. Tharp, great guy. Half of it's psychology. Like, another half of the half is like risk management.
Mhm.
Yeah.
And the other part's like just knowing the human nature and trading. And it's really a good, like, all-around book if you want to learn how to trade.
Mhm.
And have the right mentality, which is everything. You can't win. Like, okay, you could be lucky for a year and you could
Yeah.
win. You know, it could be a year or two. Who knows? You could be that lucky. But just like when it came to, like, okay, if you bought Dogecoin and you made that money real fast, you could lose it just as fast. That it's the
Mhm.
same thing unless you have like a concrete strategy.
You have to know what you're doing.
plan. You have to, yeah. Yeah.
What do you do when you go on a really bad losing streak? Because a lot of the times that if people start losing money, it's kind of like in Vegas where you lose $100 and then you want to make that money back. So
Yeah.
you keep hitting the tables, and then you keep losing money.
Yeah.
And every time you lose money, you have to keep playing to win it back. Mentally, that's what you think.
Yeah.
So if, let's say, 2 or 3 trades in a row go bad, and now you're losing money, do you take a step away? Do you try to make it back over the long term? Like, what's kind of your process faced with that
Right.
adversity?
Right. It's human nature, right?
Mhm.
I got to make it back. So I have a trading plan that has like all my rules, and I have rules to mitigate that from happening
Mhm.
to an extent. So I have like a monthly loss limit, a weekly loss limit, and a daily loss limit. You know, to prevent me from like keep trading and doing that to
It's like
myself.
a budget, kind of a lost budget.
Yeah, you know, because like
Yeah.
if you can't have big losses and have big winners, you're gonna break even or lose money. It's impossible.
Mm-hmm.
So I have like daily like limits set.
Mm-hmm.
And not only that, but I also have the right expectations. So I trade, like my risk is twice my reward. If I risk $50, if my stop loss is at like -50, my profit target's going to be $100 profit, for example.
Mm-hmm.
And where was I going with this? Oh, so for you to break even with that ratio, you need to hit your profit target 33% of the time.
Mm-hmm.
Not including slippage, fees, commissions, 33% of the time.
Mm-hmm.
With that, it's possible to have like 10. I've had 14 trading losing streaks. It can happen, you know? And having the expectation of that's possible, and that's okay, because in the long term,
Mm-hmm.
you're still going to make money, because you could lose 12 times, have a 6-win streak, and you're already good again.
Mm-hmm.
You know, it's like
Yeah.
reversion to the mean. If you
Mhm.
trust the process and you stay consistent, you kind of have to look past it. When I started, though, I wanted to cry. Like, it's not
Yeah.
fun,
Yeah.
you know? And I wasn't trading as much as I should at the time, like the amount of trades I take. So it could be like all my trades for the month, you know? It could happen.
Mm-hmm.
And, you know, just like you have to just have the right expectation. Know that your whatever risk management strategy you have, it like fits it. So like for me, 12 I've lost 12 trades before, like back to back,
Mm-hmm.
and I was okay with it because I know that's statistically possible.
Mm-hmm.
So why should I put myself like on a mental pedestal? It should never happen to me. I'm special. This is impossible. You know, it's
You're just
definitely
human.
possible.
Yeah.
You know, you gotta be humble about it. You gotta just understand, like, it is possible, and that's okay, because you
Yeah.
know what? You have another like 10 months to make it all back.
Mm-hmm.
you
That's
know?
the amazing part of the stock market. I mean, you could like literally become broke, and then next thing you know, you're a millionaire. Like, I don't know. You could you could do a lot.
Maybe. Is that your experience?
No,
No,
I mean,
okay.
yeah, I was a millionaire.
I understand what he's
yesterday.
saying. As
But
the
I don't mean
opportunities
in that
though.
extent. I just mean like you can lose, but you can also win a lot,
You can.
and you can also build up from something
yeah.
little,
Yeah.
like you.
No, that's
And
true. No, you
you're
could
you're
take
5'6".
you could take a small amount of money and build it into a large amount of money. But I do think it's interesting that, and I think I read this somewhere, that like the pain. Thank you
Sorry,
for
this
that
is just-
comment.
But on Tinder, I'm 6 foot.
The pain
Exactly. Okay, go on. Sorry.
the pain from losing is double the pleasure from winning in the markets. So like that feeling you get when you lose money is twice as painful as a pleasure you get from making money. So the losses always hit harder than the gains. Have you ever felt that?
I try to stay as neutral
neutral as
as
possible.
possible. I could feel like I'm not numb to losing.
You're
money.
like ever seen the movie Moneyball?
Is that the baseball one?
Yeah.
Yeah.
Yeah, it's a good
And
movie.
it's all about being completely rational in
Yeah.
in your decision making and not following the conventional baseball wisdom of going with your gut and your feelings. It's
Right.
all about stats and analytics.
Mm-hmm.
It's kind of like the approach you're taking with trading.
But I think you
Yeah.
need both, though. That's the thing. I think you need reason, and you also need emotion.
In trading, you need emotion. You're saying.
I think you do. I mean, look, I don't trade. Obviously, I don't trade. But I do think it's reasonable to think that, yes, you need to look at the data analytics, but yes, you also need to go with your emotions and how you feel about the company or how you feel about what you're putting in. Does that make sense?
I think that's kind of the opposite of everything that Ben has been talking about. But it's an interesting.
No,
But
that's
it's
what
okay.
that's
Yeah.
what I'm thinking. Like
Yeah.
maybe your emotions can tell you something to prevent you from
Mhm.
doing something really stupid, or just like losing a lot of money. I don't know.
Well,
I don't
I
know.
think the emotion can definitely serve as like the driving force behind like why you even want to do it in the first
Well,
place.
wouldn't that also go with fundamentals? You know how you were talking about fundamental and what's the other one?
Tactical.
Technical, yeah. Doesn't emotion also go hand in hand with fundamentals? Because you learn about the company, but then you also, I don't know.
When
I'm just
when I
thinking
think
about
about that, I think about like when I'm investing, because when I invest like very long term.
Yeah.
So the emotion comes in when I believe in the company. Like there's certain companies I own and I own it, for the fundamentals, but there's a belief I have and there's a connection, like for Apple for instance.
Oh, Aaron loves his Apple.
I am emotionally attached. No, I'm kidding. I have like an emotional.
Every time you text me, Apple to the moon.
This is gonna sound so
Apple
weird.
to the moon.
No, but it's like
Tesla to the moon.
I have a belief in the company
Yeah.
based on the fundamentals, based on their their cash flows and their balance sheet and all that good stuff. But also as a consumer of their products,
Yeah.
their products make me feel a certain way.
Oh,
And that's why I mean,
They made-
and
what-
it-
what
no,
way do they
it's
make you
part
feel,
of why
Aaron?
it's part of why Apple's so successful, because it's
Oh,
more than
yeah.
just a tech company. They're a luxury brand, and
Luxury.
people have an attachment to their phone.
Yes,
but
you're right.
that translates to an attachment to the brand, which is beneficial for the company
Yeah,
because
no-
you have such a loyal fan
No
base.
other brand has the emotions and and the, I don't know, like when you look at Apple, like you said, you feel a certain way. It looks a
feel
cer-
warm and fuzzy inside.
it looks a certain way, and I don't think any company was able to actually acquire like that same
right,
unique style.
Yeah, exactly. No, that's exactly right. And then when I
Yeah.
see like Intel's a great company.
It makes me feel great. Intel.
But it
What about
doesn't.
AMD?
Don't get me started on Intel.
But it's just. I mean, granted, it's not apples to apples.
Yeah.
But that's where I see emotion coming into play. But
Okay.
the emotion shouldn't come into play where it's like, I really want to make all this money. Let me just YOLO my bar mitzvah savings into weekly calls on, I don't know, some biotech like D whatever
CYDY.
CYDY.
But see, I think if you have the emotion and you have the technical part, like the data,
Mhm.
and
yeah,
I think you can combine those to make a reasonable decision. Not only use your emotion, because what you're saying is, let me
Right.
just spend all my money on this YOLO. That's only emotion.
right, exactly.
But I feel like, even if you don't know it, or even if you don't, like, when you're dealing, when you're trading and
Mhm.
stuff like that, I feel like we do have some type of subconscious emotion that's, going
Definitely.
along with it.
Definitely. I mean,
But-
how do you feel like you're actually like you're really able to kind of control your emotions, or does it like how often does it kind of
Throws
creep
the
up?
laptop
Because
at
you're
the wall.
you're not a robot, almost.
But,
But
I have to, yeah. So, man. So when it comes to certain stocks
Mhm.
that I just see on the scanner a lot, you kind of do build this feeling. Like I kind of want to be in that. Like the way I see what the market's doing and what this is doing.
Mhm.
Yeah.
I know how this reacts. Like it's gonna move. So there's sometimes like you have a feeling, but if I don't get the pattern, I can't take it. There's
Mhm.
so many times where it just keeps going up, green bar, green bar, green bar.
Yeah.
I can't do anything about it
Yeah.
because I just have to follow the plan. I don't have like a back test. I back test. I have no back testing for buying something 6 bars up. You know what I mean?
Yeah.
It probably wouldn't be good.
So and then back testing is when you kind of go back into the past, and you see, okay, if I took, like, let's say this formation or this pattern's forming, if I took it, where would it have gone? That's back testing. Is that true?
So when I back test the management of the stock.
Okay.
So I say I do 2 to 1. Like, let's
Mhm.
say what if I did?
What do you
one?
mean by the management of the stock, though? Like,
Like when I like, so anytime I buy a stock, I have an entry price, I have my stop loss, and I have my target. Right?
mhm.
And where's that set? When should I sell when I'm right? When should I sell when I'm wrong? That's the trading management. That's
Okay.
so like I do 2 to 1, all or nothing. So either I make the money or I don't make the money, right?
Mm.
In the past, I tried like a hybrid version where it's you sell when you're like halfway to target, you sell a third, and then you move your stop loss to break even to like protect.
Oh, I get it.
Mm.
But I
Okay.
make less money doing that through back testing. I
Mm.
realize I make less money doing
Mhm.
that than if I just did all or nothing. But it's really comes down to whatever you can emotionally control, you know.
Mhm.
So
Yeah.
you don't change a stop loss, and you have to follow the plan and what you're testing, you know, because that's your edge.
Yeah.
So you just have to it's just you. You have to be you.
Mm-hmm.
Yeah, you
Yeah.
have to be a robot as much as you can. Now it's
Yeah.
impossible to be 100% efficient.
Mm-hmm.
You know, again, you could have a bad day, and then you make a mistake, and I would say the most emotion I feel is when I make a mistake.
Mm.
When I'm wrong and I make a mistake, I feel the worst because I'm like, man,
Yeah.
it's because I did this when I shouldn't have done it
Yeah.
at all. And even when I'm right and I make money and I make a mistake, I have a whole Excel sheet for the amount of mistakes I make to the
Mm.
total trades I've made,
Mm.
and I try to keep it above like 70% for at least this year.
Mm.
And the goal is to be like at 90%. Or like
Do you think most traders are going into the level of detail that you do with your trades, or do you think most people are just gambling?
I don't know. I feel like that's a
Because I
what
think
kind of question is that?
I think well,
I don't
well,
know.
because I think the gray area between something that you're doing, which is very very practiced and what's the word? It's very
Disciplined?
disciplined. Yeah,
Yeah.
disciplined. Versus just YOLOing a bet. I mean that's the thing. It's like, and I know you were kind of saying at sometimes you just kind of YOLO in like a casino, or in the past you did.
Yeah, yeah.
Because I just feel like it's so easy to just for that line to just blur, and then
Yeah.
before you know it, you've blown up your account, which kind of makes me think like more like is day trading for everyone?
No.
No.
I don't think the stock market's for everyone. I don't think everyone should honestly. If you're too emotional, I don't feel like some people just can't even dollar cost average to like the Nasdaq or the SPY,
Yeah.
because if there's a 30% correction, if there's a COVID, correction, everyone's scared. You can't even go to your job. maybe I need to cash out and have some savings, you know. But the world didn't end. We're still here, right?
And the market's at all-time highs.
So I don't think everyone should be in the market. I would say everyone that has a company that controls like their 401k, they should definitely do that. But if you can touch it, I don't know. It's definitely not for everyone.
Yeah, a lot of people don't like putting their money and giving their money to other people basically, and just hoping for the best. A lot of people just like to. There's some people that just like to have their money not even on in banks. They just like to have cash at their house and keep it somewhere.
Inflation.
No, a lot of people.
Yeah, like a cash brick under your mattress.
Exactly.
Do you have that, Daniel?
I do have that, Aaron. No,
What's your
joking.
address?
I don't. My social security number is no, joking. If anybody wants to, steal my identity, I'm good.
I'm good.
I'm good. Yeah. I'm good. Hey, I'm good.
Do you guys have Acorns?
No.
Okay, I
You know what it
actually
is?
signed up for an Acorns like early on when I just started investing. I was like, oh, this is kind of cool. But then you really don't have that much control over where your money was being invested back then, when as how it was set up. So I never. Oh, even now. Do you want to explain what Acorns is? Because it's actually could be useful.
Yeah. So in my opinion, I think there's more risk in not putting money into the market than there is to like the decision to not put anything in the market is probably worse than you just putting some money every month in. Because it's like 73% of people have like no savings when they retire. Like the statistics are awful.
Daniel, get out of the shot! Oh my God!
No, his mic was like glitching out.
Because your thing's overheating.
I know.
But it's still picking up the audio. It looks like.
I know.
Okay, we'll
Just keep going.
Yeah.
I'm just trying to fix it. Just
Sounds
keep going.
What was I saying? So it's a big issue with retirement, and I think Acorns is a great way to get it done. Because what it is it's an app that lets you invest into their own version, I guess, of a mutual fund, you could say.
Okay.
You get to choose how aggressive it is. So that's the control you have. You could have like in bonds, or you could have half in like SPY, and then like small cap, large cap, international, or something like that. And what it does is, if you are living, let's say, check to check, right? And you tell yourself, I can't invest in the market. Well, what it does is that let's say you buy a Starbucks coffee for $4.50, right? So it rounds it up to $5 purchase, and it takes the 50 cents and puts it into the stock market. I have friends that have like $2,000 now in the market in the last 3 years. All they do is swipe.
Really?
They put no money in. Yeah.
Interesting.
And some people just don't have like the financial stability, and this is a great way to get money in the market. I use it I put monthly amounts in, and I'm just using it as like a retirement or just some way to invest for the meantime, for like a long term. I don't feel like pulling it out, and I think it's just great because it does like all the work for you. It literally pulls the money out of your account automatically. You can do daily, weekly, monthly, and it tells you how much you're gonna make when you're 65. And it's just it's a really simple. It's like a Robinhood style simple app, but it's nothing like Robinhood. It's really just meant to make sure you have money for when you retire.
Yeah. So if you guys want to check that out, it's called Acorns.
Acorns.
And it basically takes your transactions and it'll round it up to the nearest dollar amount, and that difference, however many cents it is, it'll just automatically start investing that.
Yeah.
And then over the course of however long you're using it, it'll just keep growing.
Yeah.
Keep growing.
I'm up 26%.
Nice.
But it's just the market,
That's great.
Yeah.
But I highly recommend.
Yeah.
It. Like, it's like a no fees. I think it's like $1. I think it's $1 a month.
Okay.
But I mean, if you're putting money in like every day, like $1 a day, and you only get charged $1 in fees, sheesh,
Yeah, I mean, think
That's
about
pretty
it.
good.
If you do a couple of credit swipes a day, that's maybe $1, $2 a day.
Yeah.
Just going in, but it adds up over time. That's the whole thing. It compounds
Yeah.
over time, and it keeps growing.
Compound interest,
Have
baby.
more money than like
Yes.
Americans,
Yeah.
when they retire. Simple math.
Well, that's
Dude, I'm sweating.
I know. That's a good way to end it. That's some really good advice. Again, check out Acorns if you guys are interested in getting started
Jacob,
in the investment process.
thank you so much.
Jacob Bendah,
Oh,
thank you so much.
Thank you for
Dude.
having me. This is
No, yeah.
amazing.
It's amazing.
This was fun. Oren, feel free to come on in here. We had some Technical
amazing
difficulties.
cameraman.
Daniel's laptop was overheating.
Yeah, that's why I got up. I was trying to figure it out,
And
but I
you were
mean, like,
just standing in the shot,
standing in the
covering
shot.
up Benda's beautiful face.
Sorry, Bendah.
It's all right.
It's okay.
Earth Bendah.
Earth Bendah.
Apology accepted.
Alrighty, folks. Thank you again for watching this episode of the Summer Pod Podcast. Stay tuned. We got more episodes coming out
Yeah,
every
we're on
week.
Apple Podcasts,
Apple Podcasts,
YouTube,
Spotify,
Google
Podcast.com,
Podcasts.
Google Podcasts.
Just look us up. You'll find us.
Everywhere.
Give us a like, subscribe. Make sure to do all that good stuff. And yeah, traditional fist bump. So what we're gonna do is we're gonna put our fist up and we're just gonna fist bump all together. All right.
and we touch in unison. Ready?
3.
1, 2.
1, 2, 3. Okay. 1, 2, 3.
Yeah.
Nice. All right. Catch you later.
Have a good one.